afternoon. This is Rick Ackerman of Rick's Picks. I want to look at gold today. Looking perky. You can see a chart here of the hourly. This is COMEX gold, the December contract. And yesterday it came down with the Fed out dithering. The Fed announcement actually concerned something that had been in the market and pretty well discounted a month earlier. But that didn't stop the broad averages from going into conniptions. The Fed had said that there may not be any loosening unless there's some serious problems developing in the U.S. economy. We all know that the problems are already there, mainly in the form of a gathering dark cloud that's recessionary in Europe, certainly a major slowdown in China. So as we all know, the U.S. is not an island, and the Fed will have reason enough to get back into line with the wants and expectations of Wall Street. So we can expect more Fed easing. But today, the stock market is off. The Dow's down 227 points as I speak, mainly, I think, because China has said there's very little chance for a long-term deal on trade. We've known that was coming too, but don't think that they're not going to milk more hope and change with something coming from China. That story seems to never die. So I'm sure it will be revived. Looking again at gold, though, I want to explain how we did a trade. It's called a mechanical trade, and it's set up with this little spike a week ago up to around 1521.40. That's what I call a secondary pivot. And the buy signal I put out to subscribers came on the pullback to the green line, which is comes in around 1492 and change. And let me show you the actual trading tout. This is the Rick's Picks homepage. Usually there's an essay up top there, which anyone can access. That's publicly viewable. But in gold from October 27th, you'll notice I've highlighted here that if the retracement came down to the green line, 1492.50, that's the one I just mentioned, I'd be tempted to execute a mechanical buy there, stop 1478. All right, the next day the trade triggered, and there was a considerable entry risk here that amounted to about $1,500 per contract. So as is often the case, subscribers improvise their own strategies. Officially, we bought 4 COMEX gold contracts down there, but you can use the mini contract or even GLD, which is an equity-based vehicle which tracks gold movement. In any case, we got long, took our lumps the other day, basically weathered the storm. The stop loss on this trade would have been just below this blue line at 1478. So it never got too terribly close to that before taking off this morning. And with this type of trade, I typically advise taking off half on the rally from the green line to the red line. That would have been a profit of about total of $1,900 for 2 contracts, and that would not include the accruing profit in the 2 remaining contracts. And going back to the trading room, you can see that that some traders actually reported getting in the trade. I had one relative novice. Let me see if I can find his comments, but he mentioned that he was a beginner, never made any money trading these. He goes by the handle Gabe, very inexperienced with gold futures, so thank you for the touts. He made, I think he said, a few $100s trading the mini contract. It does have much less risk than the full-size contract, but I have to warn you that the liquidity is it can trade very thin, so be careful getting in and out of that. We have some corresponding trades being reported in corresponding trades in GDX. That's another vehicle that's very popular with my subscribers. And the other day, let me show you exactly how it appeared on the home page, so you can decide for yourself whether you might have been able to get in. But in GDX, if I can find it here, I set up a pattern, and you can click on the chart here, but it was what I call a reverse ABC trade, and it would have gotten you long at 27.03, and GDX has had a pretty strong move since then. It's up at 28.08, a full point move there, about the let's see, it would be about 4% or so. So typically we're out of half of the position now, and we're just going to leave the remaining half to swing for the fences in GDX. But if it keeps going, we will have established a pretty good entry price down there on the green line at 27.03. I mentioned also that I wanted to comment on the bonds because they've caught fire, and the note I put out that was tradable on TLT was a bottom down near this pink line. It's what I call a secondary pivot. And those of you who have followed these presentations know that these hidden pivot levels can be great places to get into stocks on the cheap. So we had a nice opportunity to buy down at that secondary pivot. And I'm just waiting to hear from subscribers. I don't do much. I don't make any claims about P&L other than what actual subscribers achieve with actual money in actual real time. So if you go in the chat room, you can see who's actually saying that they were on board and making a profit in this trade. So my long-term outlook on bonds is very bullish, and of course the big sell-off that we had in September was somewhat discouraging, and it looked like we were coming down, but the downside had its limits. Every bull market has spells like we've seen in bonds, but the bond targets that I'm using are way up above what we're looking at. In fact, let me show you on a continuation chart that will give us a kind of longer term view. I want to show you the weekly chart in case you have any doubts, because a lot of times even some long-term bond bulls like Gary Schilling are beating the drums about the end of the big bond bull market. And it's true, we've had a 30-year bull in bonds, and all good things must end. Let me see if I can get this on a monthly chart here. Well, let's see. Let me click here and see if I can. All right, so let's see if I can put up a weekly chart. I'm not quite sure why it's not giving me the symbol that I've registered here. All right, let me go back to the conventional bond chart and see how far back it goes. All right, we've got a weekly here, and you can see that whatever the drums are saying, we've got a really nice uptrend in bonds, and I don't think the bull market is in any particular danger. Here on the weekly chart, we've got a valid target up there. I'm going to modify this slightly, and I think that the bonds, if and when they get past this red line, 164.28, they could go all the way to 172 and change. I think that also the corresponding interest rates will come down quite a bit. We might see new record lows on, or we absolutely will see them in 30-year and a 10-year note if we continue to have this rally in bonds, because as you know, the yields correspond inversely to price increases in the underlying T-bond futures. So here, the 10-year note, we've seen rates go as low as 1.43, let's call it, but I think we could go still lower, and I'll give you a target on this 10-year. Right now, tentatively, I would say we could get rates of 1.18% on a 10-year. So that's about it, a little overview in gold. I'm not sure if I mentioned the actual target, but short term, we're looking at, let me take you back to the hourly here. We're looking at a shot at 1535.90, and let me bring that into perspective here. So I think we've got, I'm sticking with that long position that was entered here. I'm holding out for 1535.90, but I will keep at least 25% of the original position to swing for the fences to get rack up a real score if gold just keeps going. But most immediately, I think it looks pretty good for that 1535.90 target. If you are interested in the hidden pivot method that I've used to set up these trades and also to do some forecasting, I would suggest going to rickackerman.com, my homepage, and at the top of the page, just click free trial. That will give you 2 weeks free access, no obligation. You don't have to leave a credit card number, but if you take that free trial offer, be sure to drop in the chat room and say hello. And that's a bit about it for today. I want to thank you very much for joining me, and I guess I'll be talking to you again on Tuesday.